Welcome to my channel. I'm Dr. Romano. In today's video, I want to share with you my path on becoming a trillionaire. I want to share the video with you and how I think and the path that I created because you could use this same methodology and fulfilling your dreams in life. It's just a methodology that you could apply to your situation. Now, I'm not saying that you are in the same field as me. I'm not saying that you're a doctor of finance like myself. Maybe you are a plumber and you want to become really rich. Well, you have that ability. You just have to know how to put the proper methodology into place. And so I'm going to share with you how I did it in my life. Now, I'm not a billionaire yet, or a trillionaire, but I know it's going to happen because of a situation that changed my life. And the biggest hurdles in life are your mental blocks. And I've been getting rid of my mental blocks, but there's always going to be more in the future. So it's a matter of me developing a methodology to continue to remove those mental blocks. Before we continue the video, please remember to subscribe to my channel and do thumbs up. It's right there. It doesn't hurt to press it, but that will really help me out. Thank you so much. So those people who really want to make a lot of money, and when I say a lot of money, billions, you have to go for an industry that makes billions. There aren't many. Now, also, you have to also think about the taxation of when you start to make money. You need to learn how to reduce your taxes and so forth. And there's a lot. Becoming a CEO of a company, you're limited to 100 million a year, so to speak, between 20 and 100 million, right? So logically, with that kind of income, you're not going to become a trillionaire. Becoming a medical doctor, you're restricted to a fixed income of $500,000 a year, $350,000 a year, ER doctor, $200,000 or less. So I've thought about what makes money, and since I'm a little kid, I've always asked the question, Mommy, Daddy, what makes a lot of money? How do I become very rich? Now, maybe it's because of my personality, always thinking and improving, and also trying to learn something. I thought when I was very young, when I was in my early 20s, I thought traders made a lot of money. But again, they have an average span as a trader and investment bank of 2 to 5 years. If you look in the occupational book of titles, I also worked on the trading floor, so I know. So I had to think about, okay, so if I don't want to become a trader because they only have a short career, then how can I take what they know or that industry and make a lot of money? And so I knew I had to go and get a PhD. I got 2 MBAs, one in finance and one in risk management. So I worked in finance, I worked in risk management, and I also worked for an insurance company very briefly just to learn what insurance is and how to apply it towards business. It was a internship that summer because I was getting an MBA in the second MBA, which was risk management insurance. And I analyzed every possible angle how to keep someone's wealth once you have it. Because making a lot of money, believe it or not, it's very easy. Mark Cuban said, it is very easy to make your first billion, but it's extremely hard to keep it. He's right. Because you have to educate yourself on how to keep it. 1, you put it in a private foundation so you could keep it. And 2, you don't invest it on business deals that aren't proven or aren't established. So again, you can only make a certain amount of money on those deals. For example, venture capitalists, that's a very risky business. And so throughout my life, I had to think, okay, so I knew in the year 2000 that hedge funds were going to become the future, and it was going to become the focus of finance for investors to make a return. Just because these people go out on their own, they create their own company, they have a proven track record, etc. those people that invest in them, they really are entrepreneurs because they see the value in hedge funds. And at that point I said, well, I wasn't going to become a trader because I wasn't going to deal with the stress and the awful life that those traders had and the complaints that I was hearing. And so then I thought about, well, what do you do in the hedge fund industry? And I said, well, I could become a doctor of trading. Of course, during my PhD research, I had to create a trading theory and improve it with the risk management. So I'm like, okay, they're limited to a certain amount, and even if they're $100 billion hedge fund, well, even if I was the top 10 like Ken Griffin and Ray Dalio, their income is only a couple of billion a year. So I had to think about, well, how can I make more than that? And I learned through my PhD research that hedge funds have a ceiling that once they get to, their returns get watered down. So I thought, again, how do I surpass this? It was the funds of funds industry. So I realized that if I became a doctor of hedge fund selection and become an author and improve the strategy on hedge fund selection, I improved the strategy that everyone uses in the industry, that traditional approach. I disproved it with my data. So I'm like, oh my goodness, what do I do? And of course, as a PhD, you have to come up with a new theory. And that's what I did. And of course, you have to measure that theory over time. I did that and I improved it. And so maybe this is why I have an average return before 2022, it was 30%. And of course, the last 5 years from this month to the previous 5 years, it went down to 20%. But still, an average return of 20%, that's a lot. And when the markets do move, it will go up to 30%. So, we have times that the markets move over the 3-4 years period, and then times when the markets don't move. It's normal. I then thought about it, okay, so let's raise capital for my funds of funds. But when I started raising capital, everyone was talking about cryptocurrency. And they would say, well, why can't you make a funds of cryptocurrency? It is impossible because there's not enough cryptocurrency hedge funds out there for me to actually do my research on their returns. And it's in such a new market, we needed a market collapse in order to analyze that. Secondly, we needed a stagnant market. We needed a drop. All these type of market conditions I had to analyze. And I couldn't do that with cryptocurrency. And that wasn't my passion. Because I'm a doctor of finance, I know and I always felt that the equities market is the most expansive market there is. It has depth to it. It has so much more than any market has. And because you have buyers and sellers on both sides, and there's so many more traders trading in that market, I knew that that was the market that I wanted to be in. So I had to create a strategy that was able to outproduce the markets for a funds of funds, and I did that. But then it was these mental blocks. Every time I spoke to an attorney who created the structure of a fund, they wanted 30, 50,000, 100,000, and that's a lot of money to put up before you have a client. And even if you have someone that's interested, they want to see legal documents. So that was another hurdle. Unfortunately, that cost a lot of money, and to put out all that money without knowing that I'm gonna establish it, I wasn't gonna do it. So then I finally found a company in Florida that only wanted under $15,000 to create the structure of a funds of funds and to prepare all the PPM documents. So then I says, okay, I could put out $15,000 or so, and if it doesn't, if it's not established in the first year, okay, I could continue, paying the necessary bills. And so that's when I was like, okay, I want to do this. Then the collapse of Sam Bankman-Fried. When that collapsed, I realized, oh my God, my time is here. And when I found out that he raised almost $40 billion in 2 years, I said, I could do much more than that because I have a proven track record, meaning the 7 to 8 hedge funds that are in the funds of funds, they have a proven track record of 20 years, 15 years, 8 years, etc. So I realized, well, if someone and a group of people were going to put capital, and he had hundreds of clients, they were going to put money into that industry, and to someone who only had 2 years trading experience. Secondly, how could you start off at a company as a trader? You don't start off as a trader, you start off as an assistant trader for 2-3 years. And if you're lucky, in other words, if you know someone, you get to become a trader at a big company. I realized, well, something wasn't measuring up with his experience. And I always felt that experience never gave people talent. And the fact is that he didn't have talent, because if he had talent, he would have known how to get past a collapsing cryptocurrency market, and he didn't. He was able to make money, supposedly, on a rising market, just as everyone did, and that's an easy market to make money. And then after I found out that he put his girlfriend as a trader who had no experience, and his friends and the people that he knew at the company as management, that was a fraud to begin with. In my case, how would I do it so different? Well, with my idea. Oh, and another thing was, there was a big hedge fund manager that said they invested money. They said they liked his idea and they liked his personality. Well, people like me, or they hate my guts. There's nothing in between. So I realized, okay, so I have to find someone that likes me to invest in me. All right, well, once that happens, and the fact that I'm at such a time where the real estate market is not going to go through the roof anymore, and the cryptocurrency market has seen its heyday for a while until it's been regulated and improved, etc. So I'm at a perfect time to start my funds of funds. And once this is established, and I'm going to tell you how I'm going to become a trillionaire. A CEO of a company who's an employee has a cap how much they will become, how much wealth they'll have. A hedge fund manager, even if they're the top 10, they are going to topple out between $1 billion to $10 billion a year income, personal income. So I said, okay, I already knew that if I become the largest funds of funds manager, I will surpass them and I will become a trillionaire because of my ideas. It's not just fake ideas like Sam Bankman-Fried had, and all these good ideas and how he spoke to people. Yeah, he was probably good at speaking to people, but after I analyzed him, he wasn't. He couldn't really answer the question, and his presentation of himself was horrible with his hair and his dirty white t-shirt that was yellow because it wasn't cleaned properly. I says, oh my goodness. So if someone will invest in him, or many people did, then I will find the capital. So every $1 billion that I raise in AUM for my funds of funds, I will cap it for that funds of funds, which has 7 to 8 hedge funds in that funds of funds. And then I'll start a new funds of funds. And once I raise another $1 billion, I'll cap it again and keep repeating the cycle. There's a lot of money out there, and if you know how to get it, I have real estate experience in commercial real estate. I know who those billionaires are. All you have to do is call them or send them information and present yourself. I realized that I was also good at marketing because I have this background. And part of having a good idea, you actually need to know how to market that idea. The more people I get out to, meaning I call the owner's book in Manhattan, the owner's real estate book, I call the owners of the multi-million-dollar apartment buildings in Manhattan and the multi-million-dollar real estate. In my commercial real estate background, I spoke to Larry Silverstein, and it wasn't just I spoke to him a number of times. I didn't realize he was the owner of the World Trade Center, and it was really embarrassing because after I found out, I got a little nervous, you know. After I get 10 billion in AUM, I will create another company, and I will create an IPO of that company and go public. Kind of like what Warren Buffett did. So after I get 10 funds of funds, I want to create another company that is sort of a mutual fund of funds. And yes, the returns will be a little watered down, but technically they won't be, because I'll just reduce my management fees, since I'm the funds of funds manager for the 10 different funds, and allow the stockholders, once it goes public and I create that IPO, I will allow them to take more of the profits. And this is very important because once the stock goes up, maybe it will start off as like $10 or so, but once it goes up to several hundred, $1,000, if people are making a really good return on that stock, a really good dividend, why wouldn't it become the most popular stock? If all this is legal, I don't know how the legal aspect of creating a funds of funds mutual fund, so to speak. But it's a product, it's a new product, and this is what we need, our new products. So again, this is very important why I say we need more traders out there. I'm very much limited in the equities market to find really good traders. Not traders, so to speak, hedge fund managers. But I also realize it's how you put the portfolio together and how you put that puzzle together to create a phenomenal return with low risk. And it's just based on market conditions. So I want to share with you how much I'll make from 10 billion. Every billion, if the funds of funds does 20%, that's 200 million. I only keep, based on management fees of 10%, 20 million of that. That's a lot of money from a billion AUM. So every funds of funds, I will make a personal income of 20 million, so to speak. It's hypothetical. But if you times that 20 million by 10, that's a lot of money. And if you times it by 50 billion, that's a lot of money. And if you times it by 100 billion, that's an enormous amount of money. And my IPO, as it makes money and I give the dividends to the shareholders, that also increases in value. So not only will I become a billionaire with my funds of funds portfolios, but I'll become another billionaire with my, so to speak, funds of funds mutual fund IPO. Remember, an IPO is like the worst thing that you could do for your company. You only do it when you want to make a lot of money very fast, but because you're going to dilute your ownership of the company, it's only done really to raise a lot of capital. And so what I know to do is to make sure that each funds of funds that I own is separate. It has nothing to do with the IPO. You make sense? They simply become a client of the funds of funds. Next, now it's hypothetical, but as I'm making these billions of dollars, reducing your taxes is very important. Buying a private jet is not going to reduce my taxes because I'll be making so much money. Building a mega yacht at 350 feet is still not going to reduce my taxes every single year. So what do? I will take 30% of my total income. So let's say it's $10 billion a year. I will take the $3 billion okay? Dump it into a private foundation in Liechtenstein, a private foundation that is not, it's for the family, etc., for future generations, to create that legacy as the Medici family did of Florence, as the Fords did of the Ford family. The Vanderbilts, unfortunately, they were a bit ignorant and they didn't know to do that in the 1800s. If they would have done it and kept all the capital together in one entity, the return on that per year, they could have bought the biggest real estate portfolio in the world with that capital, but they didn't diversify. In my case, I would separate the value of that family foundation, that private foundation, whatever you want to call it, and I would always take 20 to 30% invested in commercial real estate. Of course, it's more of keeping wealth. You're not going to really make so much money because of the high value and the cost of commercial real estate, and the return on investment is very low. It's not like what it was before the 1980s. Before the 1980s, it was above 10%. Now you make money based on equity, buying a building, waiting 10 years, paying it off, and then selling it for more. But because of all the taxation in that industry, you have to also analyze, well, how could you reduce your taxes in your private foundation? Yes, the private foundation in Liechtenstein doesn't pay income tax if you don't live there, but the investments are in America, so it is going to pay either capital gains tax or income tax in some way, and that is very high. If I focus on investments that there's only short-term capital gains, then I'll reduce my taxes a great deal. Again, a funds of funds is only taxed at short-term capital gains. So in other words, once I take the money out of my account, out of my name, meaning that 30% I dump it into the private foundation, that's only getting taxed at short-term capital gains. Now, what do I do with the other, the 7 billion? Well, I'm going to have to pay income tax on that. Based on the strategy that I've created, the 30% goes into the private foundation, the other 70%, yeah, you got to pay income tax at the highest rate. But if you take that all of it and dump it into the private foundation as well, you pay the tax, and then you basically, the calculation is from the total tax of 10 billion, right? Let's speak if you didn't put it in the private foundation. The total tax rate goes down 11.5%. So in other words, yeah, technically I'm paying high taxes on the 7 billion, but no, I'm actually reducing my taxes by 11% on that money. So again, I dump it into the private foundation, and I repeat this every single year. You don't have to be a billionaire to do this. The private foundation will only get taxed as short-term capital gains if most of the investments are in my funds of funds. I will create an aggressive funds of funds portfolio just for that private foundation. So again, that private foundation will become so wealthy, it's beyond compare. Secondly, as I make money, my IPO, I'll have even more money to dump into my private foundation, the stock, because I don't need to keep that stock in my name. It's actually not normal to keep all your ownership of the company in your own name. You put it in your private foundation name. I will take 30% per year and donate it to my private foundation. So I'll make even more money on that. The shares, as well as the fluctuation as it goes up and down, whatever I could, on good years, when over a decade, when the markets are doing really well, that stock is going to go through the roof because the dividend will be enormous. If I can make a 50% return in 2020 from my funds of funds, which is hypothetical, then I could do it again multiple times when the markets are moving. And so this is how you create wealth. This is how I believe I will become a trillionaire. And the fact is that I know market timing. If you watch my videos, I've told you when to buy gold, I told you when to get out. I've told you when to get out of real estate, etc., when to get in the stock market. And so I'm proficient at market timing. You have the commodities market, the equities market, that's the stock market, and you have the real estate market. You need to understand all this. You buy gold when the markets are moving over that 5-6 year period, when the prices of gold are cheap. You don't go try to chase the real estate market. You don't do that. You buy the real estate market after a stock market collapse and everyone's foreclosing. And it's a cycle. So you don't have to feel that you lost your chance. The cycle happens over and over. Do not chase the investments. The investments should chase you. And then you sell your gold portfolio when the stock market's collapsing because the gold prices go through the roof. Again, I've made a fortune on my gold portfolio. You buy the stock market when it's at its lowest, again, and then you sell it when it's peaking and everyone's making a ton of money. And this repeats over and over, centuries after centuries. If you go back in time, it's almost like a math equation. When gold prices are spiking, you know that there's going to be basically a stock market collapse within 3 months. That's the average, 3.5 months. And it has to peak though, because it's going to go up over a 3 to 5 year period as people start to get worried about the stock market and the economy. So it does take a while, but when it peaks, you will know you have 3 months to get out of the stock market. And then you have about a year when the stock market collapses to sell your gold portfolio. And you don't actually have to buy the gold bars. You could buy the ETFs. So it's paper, but you don't have to hold on to it and pay for the storage, so to speak. Next, how to accumulate wealth. Well, the best investment is an investment that never goes down. It goes sideways when the markets collapse, and it goes up when the markets do well. What is that? Those are diamonds. Part of my net wealth has to be in diamonds to create that wealth over centuries. And that section, you never sell it. And your gold coin collection, you never sell it. You continue buying it, and over time, you should have at least 20% of your total portfolio in diamonds and gold coins. Your ETFs in gold is different. That you trade as well. And so that's how I would accumulate wealth and a huge portfolio. You have to have a certain amount of wealth in real estate, but you have to buy it at the right time. And so that all plays a role in when I would buy it. And there's a percentage of that you don't actually sell. If it's generating a return every month, every year, meaning on an apartment building with 300 units for, let's say, $100 million, you keep that. And over time it grows. But there's a way to increase that even more, meaning you put down your 50% cash and the rest you get a bank mortgage for and let the tenant pay the mortgage. So you also accumulate wealth over a 20-year period. And so that's how I would create wealth. I would also buy mega mansions in certain neighborhoods and build them. So it's very important to have a lot of land. I'm talking about 100,000 acres at least in certain states, that the land is beautiful. I already selected the plot of land in each place that I like, based on each season where I would want to live. It's boring living in the same spot, but that's a beautiful life, and to keep myself busy mentally. I'm going to focus on the funds of funds because that's what I'm a doctor of. And so hopefully one day, if this all happens, I will become a trillionaire, because Warren Buffett, the owner of Tesla, Elon Musk, and Bill Gates, and the owner of Amazon, Jeff Bezos, they are owners of a company. They own stock. That's not real wealth. They can't control the fluctuation of that value of the stock. They could do the best job they can, but the markets dictate what it is. And so that's the difference between me and them, because the funds of funds, I'm 100% owner of it, I would be. And if you have 100 of them, 100 billion, that's a huge income, and I'm dumping it into a private foundation. Secondly, I'm protecting myself legally. Very important. Don't wait for your attorney to protect you after the fact, because all they are is a person, a company that files documents. That's what they do. If they want to protect you, they will tell you to create your private foundation in Liechtenstein, not America. And of course, and so forth, and other ways, LLCs for each property, and so forth. And also, for example, my marketing team from my funds of funds that I will create, I will create another LLC, marketing whatever, call it marketing, hedge fund marketing, and I will employ people through that LLC, and then my funds of funds will pay that company as an outsourced company. It's better to outsource a lot. I know the administrator, you have to do it legally, and the hedge fund accountant you have to outsource illegally, but the marketing you don't. However, it's better you do. And so I will make sure that's also done. I will teach these people that I have on my team how to market, and I will go over every little thing that I learned, whether it was the real estate experience that I had selling commercial real estate. I sold a trophy property within my first year and a half on the Upper West Side. It's a church built by McKean, Mead and White. I sold it to another church owner. I sold development sites, the sites that you would never think that would get sold because there were squatters on there. It sold. And I learned how to speak to people on the phone. I love cold calling. You have to get over that if you do commercial real estate. A lot of people don't like cold calling, but I did. And so, again, that's how I would teach my staff to find capital, to find those investors, not the $1 billion ones. I'm talking about to have thousands of small investors at a minimum required by the state that funds of funds in. And so in Colorado, it's 2.2 million. That's the minimum that you can invest in a funds of funds. And so I would create thousands of clients. Of course, the administrator that I select and the hedge fund accountant is going to make a lot of money, but that's how it is. And so that's my dream, that's my focus. I even have nightmares in the middle of the night that I become a trillionaire, not just 1 trillion, 3 trillion. And I keep having this nightmare. And even when I was a little child, I used to dream of being a Maharaja of India. I don't know why, because of how wealthy these kings were. And I was not even 2 years old, maybe. I had diapers on, so what is that, 1? My aunts and uncles would take me to McDonald's, and you know the gold crown that you had, the paper one? Well, if McDonald's didn't have any more, you could guarantee you I would scream hysterical. So my aunt, my godmother, she was smart. She would take a whole bunch of them, stick them in her car, and when she would come to McDonald's with me, she would have someone else go first, and they would give it to me, just in case they didn't have it. I would cry hysterical because I wanted to become the king. And I didn't understand my personality. Why is a child like that from 1 year old to 2 years old? You actually know your kids when they are under 5 years old. You understand who they are. Everything. That it's not hidden in children. Thank you so much for watching my video. Please remember to subscribe to my channel and do thumbs up. It's right there. It doesn't hurt to press it, but that will really help me out. Thank you so much.